What's up, guys? It's October 21st, 2025. We're doing a 10-minute breakdown of the E-mini where we talk about trap traders, setups, and market context. You guys want to see how I actually place these trades? Check out the membership section where I'm winning and losing in there. I talk about trap traders. I trade with limit orders for the most part, so you'll see how I'm placing limit orders right where trap traders are getting out, and that shifts probabilities in our favor. Be a quick one. We got a trading range day today. Nothing too exciting. I'm going to talk about how the open told us that, and the market cycle helped us know we'd probably have a trading range today. We got the weekly chart on the left. We got the daily chart on the right. We've been in a bull run for since April 7th. Big rally. Every bear bar has been bought. I was a little skeptical on this bear bar because we were at a new high. But nonetheless, the bear bar did still get bought. The target for the bulls is going to be the high and then a measure move up. And bears want this to be a deep pullback and get a second leg down. We got the daily chart on the right. Big bear bar closing out slow, far below the EMA. Ended up bears got a second leg down, but the minimum objective was one tick below the swing, so right around here. Instead, they got a second leg attempt here, all second leg attempts, but they are a type of a second leg, but they all failed and it ended up reversing. Bulls are buying lows, bears are shorting highs. Buy, sell, buy. Now bulls have two bull bars in a row, so we'll see what happens. Is this just a vacuum up to the trading range high, or is this going to be a start to another breakout? We won't know till the bars print. So how could we have known today was going to be a trading range day? Well, what's the market cycle? The market cycle is breakout. First, the opposite bar starts the channel face, channel higher. And then after we get a channel against the channel, so we have a bull channel here and a bear channel here, that's sideways price action. And that's pretty much what we got since yesterday. Went to yesterday's swing high. Kind of made a new high today. I'm just using this for reference. Ignore the can make it a little cleaner. Okay. So that's the trading range we've been in since yesterday. That's also what the market cycle says. It says breakout channel trading range. So we've had back and forth trading ever since we got the bear channel down here. You can buy lows, you sell highs. Both sides are making money. The trading range is the end of the market cycle, so now we're waiting for that new breakout to reset. Maybe we get the breakout down here, maybe we get the breakout up there. We don't really know, but then we get the breakout. We wait for the first opposite bar. That's gonna be the channel phase, and then we trade that in the direction of the breakout. And then once we start to see an opposite, now just because we see a channel against a channel, that doesn't mean start fading. It just means we're in a trading range. There still might be more momentum to the with trend traders. So it's just kind of keeping us on point. So bar one, trading range bar. We have buyers below and sellers at highs. Bar two, bulls try and break out, but then bar three ends up being a bearish breakout. There are more sellers at the EMA than buyers. Bar fours follow through, but bars 3 and 4 don't really close on their low. They're around the midpoint, and there's tails, so people are buying. Bar 5, inside bar. That's breakout mode bar. Yeah, we have a few inside bars today. It's breakout mode bar. Sometimes they often get retested. So it broke out, got retested on 8, but then that started the rally up. I took a couple trades. I got a little bit cut up at the open, but I made it back, catching the swing up. Definitely my goal tomorrow is to take less trades. Oh, great. That's why I didn't want to mess with my fibs. Come on, please work. I think that's the one. So I took this trade here. I kind of FOMO'd the first leg down. Honestly, I traded a second leg trap. Got stopped out, waited a little bit of time. I saw this bar stalling right around the EMA, bar 10. Then I got short. So my entry okay, hold on. Two things going on. I tried to take a second leg of this trade, this leg from 5 to 7. Got stopped out. Then I waited to see what would happen at the EMA. And at one point in time, bar 10 was stalling. So I got short. I tried to get a few extra points. And then when it closed, I exited. And you can see I would have got stopped out. Then this is where the day kind of got okay for me. 2 losses in a row. One was skeptical. got filled here on 13, or I had a small order right here, so I got filled at the EMA, and then I bought actually at the or at the 50% pullback. Bear short down here, the short more up here. They get out break even, and the market starts to rally. I held through this rally. My target was the high of yesterday, bar 57. Then I saw 3 bars in a row, 16, 17, 18 with a gap. I thought, okay, this is Sean to get its own second leg. And then I pressed my position on the next setup. So this is the next setup. 3 bars in a row, bears short 15, 16 low. They're trapped. They're gonna short higher and get out break even. So I, instead of exiting, I added another contract, and I exited at 21 high. So I was pressing my position, but I was only doing it because it was a setup that I was already in this 4 bar market channel. Trade range behavior, you can scale in, but I don't recommend scaling. I think it's best to just take a loss if you're wrong, and then the next 1 or 2 trades should work out in your favor if you're a scalper. High probability setups generally, you have to be taking high probability setups if you're a scalper. That's the only way it works. So 3 bars in a row, 8 through 11, 4 bars in a row. Excuse me, Sean to get second leg down. Bears short the low of 7. They short the high of 11. Bar 12, kind of a bear vacuum. It's scary buy, honestly. It kind of looks like it's going to collapse, but then bad fall through 13, and you can start to see the second leg forming 13, 14. Bulls are trying to break up with the EMA. 15, bad follow through. I would have liked to see a nice bull bar closing here, but nonetheless, it just ended up being a pullback, and then we have 3 bars in a row, 16, 17, 18 with a gap. Shot to get second leg up. I'm going to speed this up, guys, because we're getting close to the 10-minute mark here. So 3 bars in a row, starts to go sideways. Bar 20 is a high one in the trading range after 3 legs, so I don't think that's a good buy. Leg 1, pull back with 2, pull back with 3. It's actually a better fade. Take that scalp into the EMA. Not a trade I would take, but it's trading range day, so it did work today. Again, first principles are the market's either breaking out or reversing. Bear short down here, the short up here. Then that's the trade you guys saw me right up. I got filled on 35. Kind of a lot of back and forth action. Remember how I was talking about in a few videos ago, each leg is made up of 3 legs. Leg 1, pull back leg 2, pull back leg 3. And then look at this leg here. Leg 1, pull back leg 2, pull back leg 3. Or you just want to count the opposite bars. Leg 1, pull back leg 2, pull back leg 3. Testing the high. Now we have 3 legs up. If you, however you want to count. Leg 1, pull back leg 2, pull back leg 3. That makes bar 40 a high one in a trading range, because this is the 3rd leg. It pulls back. Now we have a high one. Big bear vacuum down. 41. Good follow through. 42, 43. Pull back. 44, 45. I actually faded this bar with an options contract. I ended up getting crushed. I just exited right around here, and then bar 80 went straight to my target was right here, and I would have got paid handsomely. But it is what it is. So in trading range, we get delayed second legs. Leg 1, deep pullback, delay, and there's a second leg down here. Where am I? 45, 46 sells off. I faded the high of it, so I was in profits. I didn't really take too. It was more the theta that got me than the price. 47 sells off and reverses, and we start to go sideways. Somewhat of a bear flag. I said in Discord, like, you know what? This is sketchy. There's a lot of buyers here, and this rally happened. I was like, well, there goes. They're crushed anyway, so I'm just gonna hold on. 51 through 56. 51 through 56. Should not to get second leg. Leg 1, pull back leg 2, and it does. So it's a pullback. 57 through 58 is a pullback of a pullback, because this is the move, this is the pullback, but then it gets a pullback right here. So let's see. Yeah, look right there. There's your scalp. Bears are trying to short 49.50. They're trapped now in this rally. They short higher, get out, break even. Boom, you hit your target on bar 60. Then we start to go sideways. Kind of a tight trading range for the last quarter of the day, about 2 hours. Bulls try and get the breakout 75 through 76, and then it reverses 78 through 81. Pretty challenging day. Let me know how you guys did. Trading range behavior. It's still early in the week, so if you took a loss today, don't worry. We got Wednesday, Thursday, Friday to make it back, and we got 2 more months left in the year. So hope you guys are gearing up for the end of the year. 2025 is pretty much over. I'm gonna say hope you guys are gearing up for the start of next year. Anyways, you guys have a good one. Thank you for your time, everyone. Bye.